What if you have business owners that are saying, I'm fine. I don't really want to take anything out of the company. I want to at least keep everything in for the first year or the first 3 years. Do you have to pay yourself from your company?
You are required to pay yourself some type of officer's compensation in order to pay Social Security and Medicare tax. So what I have a lot of clients do, for example, I had a client that retroactively filed an S corporation return. He nets 1.2 million a year, and he did not pay himself an officer salary that year because he was not an S corp. We did it retroactively. So what we did was we created a conservative salary. We reported that on his Schedule C on his individual tax return, so that he would pay self-employment tax on that, which is the Social Security and Medicare portion. And I hope I didn't confuse any listeners, but like I said, it's a strategy to avoid, the IRS going after him for not paying payroll taxes. But I get a lot of clients that say, I'm not paying myself payroll. And I say, great, you better have a wonderful attorney, have your annual shareholder minutes, and writing into those shareholder minutes the amount of cash that needs to be available to operate your business in case of an emergency. So that's where we bring the lawyers back in. And
right, for the justification of not paying.
Exactly.
What about LLCs, though, where you don't have shareholders and directors? You just have the managing members and you have the managers. Is it the same thing that applies?
Great question. So no, I do not have any, and those are considered partnerships. So if you have an LLC that has multiple partners, it's considered a partnership. Partners that, if you and I are in a partnership and I provide services for our partnership and you pay me for those services, those are basically reported to me as what they call a guaranteed payment. And it's like a salary. So when I go to report on my individual income tax return, that flow through form that we talked about, it's the tax return, the individual tax return that you're preparing, it generates that self-employment tax that we talked about, which is 15.3%. So you have your individual, income tax based on your income, and then whatever self-employment earnings you have, your tax return will calculate an additional 15.3% self-employment tax.
I didn't realize it was 15%.
Yeah, because remember, it's the employer and the employee portion of FICA, Social Security.
So you're paying yourself, but you're paying the IRS for paying yourself.
Sure. Yeah.
Huh. Okay. This is very informative. Yeah. Lisa's shaking her head like, okay. Because a lot of our listeners, just to let you know, Karen, we're talking to small business owners, people who are in that position to, they've created a business of some sort, and they're just trying to make it. They're just trying to.
That's why I say the S corp is really the way to go, because you kind of eliminate all of this. I like plain vanilla. Plain vanilla works for me. So although I could educate and talk about all these different topics all day long, I like plain vanilla. It serves me. So I try to keep things as simple as possible for the client and empower them to understand what they're doing so that they have a full understanding of what's going on in their business. And then as they grow, we kind of, throw out some breadcrumbs for them to nibble on so that they can understand a little bit more of what is ahead of them. And that's what I like to do. And I like the S Corp for that reason.
The content on Minding Your Business is for informational and educational purposes only and should not be construed as specific legal advice. This show discusses general legal issues affecting business owners. Opinions of the guests are not necessarily that of the show. If you need assistance with your specific legal issue, please consult with a licensed attorney.